This is James Cox of GoldMoneyFuture. Welcome to this episode of the 18th of September 2012. We have a very special guest on the line. That is Ned Naylor Neyland. Ned is an investment director for Cheviot Asset Management, a financial expert, precious metals analyst, and a regular on financial news channels such as CNBC and Bloomberg. Ned, it's a pleasure to have you on the line today.
No, thank you very much for having me. I'm always pleased to have a chat and discuss some pertinent subjects.
Okay, great stuff. Ned, I'd like to start with a small story. When we first met, you were saying that at the beginning of your career with Cheviot, you were given an imaginary £1 million and asked what you'd do with it in terms of investment. And you replied, "Well, that's simple. I'd buy £500,000 worth of gold and £500,000 worth of silver." And I can only imagine, the look of disbelief on the table of interviewers. You've got a young man here saying something that's clearly stupid at an important stage in his career. And yet, over the last 10 years, you've been proved to be absolutely right. I guess the question alludes to, you were already thinking outside of the mainstream at an early age. Why is that? What influences did you have that made you think that way?
That's a great question, James. The first thing I just say is it wasn't actually at Cheviot where this happened. It was at a previous job, but it's all
Sure.
still the same point.
Okay.
And I think the answer is that look, I went and did a master's in London after having been at university in Latin American area studies, which is about the politics and economics and sociology of Latin America. And I found the process of doing a master's and the discussion that you have and the debate that goes on in those kinds of forums to be quite revealing of, I suppose, of what I perceive to be the way things work. I found it rather amazing that people felt that the way to get things to change in the world and the way to understand things was to go through mainstream channels, i.e. things like the UN or going through regular government channels, and that's the way to appropriate change. Now, even at university level, I knew that was obviously not the case. And I think that sort of catalysed me to try and read books that I would sort of find myself, as opposed to ones which are given to me in a curriculum. Now, I'll be open with you and say probably when I was at university, when I did my master's, I read less than I should have done, mainly because the books that you're given and the reading material you're given is fairly dry. And after that, I sort of realised it doesn't have to be that way. You can find your own subjects and you can develop your own interest in areas, in educational and historical areas. And I came across Ferdinand Lipp's book, Gold Wars,
right.
Fairly soon after he wrote it. And I would say that was a seminal moment in terms of my understanding of the cyclical nature of monetary systems, and how, throughout history we've had a battle between what one might describe as sound money and what one might describe as unsound money. Now, unsound money generates enormous benefit for a small amount of people, which can be perceived by those who are relatively near the top of the pyramid as being a good thing. But with the context of history and the context of the types of growth and development that take place under sound monetary systems versus the opposite, it became pretty clear to me that there was something rather important going on there. And the other thing is, of course, I right early on, sort of before I actually started, I came across the concept of negative real interest rates. Now, for someone who didn't have an economics background, which I didn't, this is a fairly sort of dry subject when you look at it initially. But of course, I found it, actually, I did find it fascinating. I thought it was such an amazing concept that you could be losing money while just holding money. It was a profound realization. And what with interest rates having been driven to the basement after the end of the dot-com bubble, we immediately entered this negative real interest rate environment from which we have not emerged, and neither are we likely to for some time due to the nature of the derivative market and the reliance on the housing market. I suppose that's what drove my interest in a non-mainstream view of financial markets.
Okay, so it was the combination of studying negative interest rates and gold wars by the late Ferdinand Lips that made you
That's right. Yeah.
made you realise that there's something, inherently odd about the financial system and monetary system that we have right now.
Absolutely.
Okay, and that it only seems to really benefit a small minority of people, which brings us to, where does this money come from? Which is central banks. So just recently, we've had QE3 from the Federal Reserve, Ben Bernanke. I myself, as an investor, was caught out by it. I didn't doubt for 1 second it would come. I just didn't realise it was going to be coming for so early. And my understanding was that there needed to be some sort of reason or excuse or spark to get the money printers going. So I imagine that there would have to be some sort of another crash, Lehman style, or some other event that would justify the money printing. And yet, on this one occasion, Bernanke stepped forward and he said he's going to print $40 billion, I believe, every month until things get better. So could you explain to our listeners what is the rationale, or at least the argument, that is hoped that central bankers hope that when they press print, things are going to get better? What is the argument in terms of demand and supply?
Well, I think there's a difference between the argument and the reality. So let's break it down into two.
Sure.
So the argument is that reliquefying the banking system effectively will allow more lending and allow kick-starting of growth by recapitalizing the banking system. Now, of course, in reality, the central banks actually don't want a lot of money to be released into the economy. And the reason why is because they know full well that if that happens, the inflationary impact is going to be too fast, too soon. So actually all they're really doing is just trying to maintain a level of solvency which is good enough to keep the markets supported, but not so much so, and in other words, not so much so that the velocity of money accelerates rapidly. Because of course, when you're talking about the amounts, the sums that have been created through the various QE programs since the first crash in 2008. This amount of money, if it did start to hit the real economy and people started to put, businesses and high net worth individuals started to put the cash, which is currently sat on the sidelines, also into the market, you're just going to see a ridiculous rise in there'll be a crack up boom in asset prices, which wouldn't be followed by wages, which obviously leads to a crushing drop in living standards in real terms. Now, this is the concern of the gold bug, always has been and always will be, because when money is unbacked, history tells you that politicians will always operate the same way, which is whatever is politically expedient is what they'll do, and what is politically expedient is effectively to reliquify and print. But yeah, the top line, what is given to the public is we need to print money in order to improve bank balance sheets, therefore allowing them to lend money to the private sector and improve the loss of the average person. But I would argue that in real terms, that's not actually what they're trying to achieve. They're trying to retain a veneer of solvency, give the markets overall confidence. I think actually Bernanke rather alluded to this in his speech on the back of the announcement of the latest QE program, where he alluded to the idea that the QE program would lead the general public to spend money, and then he said, for whatever reason. In other words, he doesn't really believe in himself either. It's not about the real effects or the real plan. It's about perception, managing markets, and managing algorithms ultimately, because algorithms will now run the market. So scarily, we're in a situation where political rhetoric as put forward in news releases. The language is so carefully managed, because it needs to be, because that's what drives the momentum in the market. Because, what happens is these algorithms read these news releases in the space of about 0.01 seconds, and then immediately they're trading on the back of it. So, ultimately all of these policy announcements are designed to manage markets, and as Chris Powell from GATA has said, there are no markets anymore, just manipulations, and I would sadly have to fall in line with that statement. I sadly think that is the case. So when you ask the question, what's intended, and I would just sort of say, well, you've got to split it up between what the average investor and the average FT reader would take from it versus the reality.
Okay. One question that really seems to elude a lot of people is that the nature of the Federal Reserve and central banking itself. Recently interviewed Dr. Edwin Vieira, who gets rather upset if you call a US dollar what most people call a US dollar. He says it's a Federal Reserve note, and he draws quite a strict dividing line between the two. With regards to the Federal Reserve, Bank of England, they've got the power to create money. Who owns the Federal Reserve and the Bank of England?
Well, ultimately that's a difficult one to get to the bottom of. There's no visibility. I think that the Bank of England in particular is a very mysterious entity. I think the Federal Reserve people are relatively, there's a reasonable degree of understanding of what happens in the Federal Reserve System. It's effectively like a holding vehicle for the underlying banking system. And I think the prevalent issue and the live issue with that is actually more to do with the way that the Federal Reserve System charges interest on its loans to the federal government. Number one is an important issue, and the other one is to do with the way that stocks and bonds are settled within the US and Canadian system seems in some way to relate to the Federal Reserve System itself. In other words, there's an entity called the Depository Trust Company, I think it's called DTC, and all transactions in US and Canadian markets are actually cleared through that system. And I think there looks like there are tentacles of ownership that emerge from the Fed and go through the DTC, which mean that indeed, as you deal in those markets, in fact, you're not actually the legal owner of any stocks and bonds within the US or Canadian system. You are the beneficiary, but not the legal owner. And the legal owner is the I think it's the parent co of DTC, which is called Seeding Company, CEDE, and company, which is obviously in English language that word means to surrender ownership of. Yeah. And I think that's live. I mean, as to the exact nature of it, you won't know, because until we get the kind of exhaustive audit of the whole Federal Reserve System that followers of Ron Paul and other libertarians want to happen, I don't think there's any point in trying to speculate too much. I think Edward Griffin's book about Creature of Jekyll Island is a worthy read and very interesting. But I'd say what matters more is not who the underlying owners are, but how that actually manifests within the system itself. And certainly in the US, what I sort of detailed just then is the way I see it. As for the UK, I'd say it's even more obfuscated and mysterious. But one way or the other, I'm certainly an advocate of no central banking, no banking laws, really. I think we should just have a free market for money. Of course, this will lead to, there'll be problems initially, but I think what one wants to do is get rid of all these different layers of government and regulation and allow free competition in monetary markets, which would tend to lead, I imagine, to gold and silver reverting to their status as the finest form of money. And I don't think it would take a very long time for them to do that, should they be allowed to float freely against paper units.
Wow, and that really does get to the crux of the matter, doesn't it? Gold and silver. Moving on to gold and silver then. There's an awful lot on the internet and at the library now about the subject of gold at your local bookshop. Now we've got some some experts, such as Mike Maloney, who points out that gold every now and then equals the value of the US dollar in terms of volume, and cites 1934 and 1980 as an example, and says that for history to repeat, we'd have to see gold at $15,000 to $20,000 dollars an ounce. There's other people who point towards the fact that every now and then gold and the Dow equal each other. So my question is, Ned, do you see this as part what we're seeing right now in terms of monetary history? Is this part of yet another cycle, or are we seeing something more fundamental in terms of long-term monetary history?
Well, I think that's I would say both, really. I mean, it's a cyclical event. As I alluded to earlier, you tend to get eras of sound money followed by eras of loose money. And I think that you can certainly say that that's the case now, but it's also obviously the case that we've never had a situation where every single currency in the world is unbacked fiat. I mean, that is a completely new experience for human beings. There's always been somewhere for you to flee to in previous cyclical events. There's always been somewhere for you to park your money in terms of, domestic national currency units. There's always been somewhere for you to go, but that's not the case now, which leads this issue of free gold or gold, floating versus fiat as a more. It's going to be more of an event this time because it's just not known or understood. It's been completely forgotten as a frankly stunningly important issue.
Sure.
Human beings always remembered this until probably about 73. I would say about 2 years after Nixon closed the gold window in the US, we'd already entered the new world order of paper money. But it is a 40-year experiment in the context of, I don't know, 3,500 years of the use of money in this modern context. 40 years of the people at the top of the pyramid benefiting at the expense of the people at the bottom. The third world real standard of living has collapsed over that time frame. The standard of living of the 1% has gone, sky high. So I think it's a bigger event on a global basis, but I think it's still a cyclical, manifestation of something which has taken place many times in history.
Okay, so it's still a cycle then, but part of a much more long-term cycle, and we've got to look way past the 20th century in order to understand what comes next.
I would say so, yes. I think that's absolutely right. I think it's, what's taking place now is just a much bigger, uglier version of things which have taken place before.
Sure.
The issue is really more about how this ends. Does this end with banking collapse, followed by a new system, or is it denouement? I suppose one would say global Weimar. Do we get dominoes whereby, in my opinion, I think the global Weimar idea is probably more likely because of what we discussed earlier, which is the governments do have the ability to just reliquefy and refill the coffers, no matter what structural issues lie in their way, and they do exist. And I would say that once one developed nation panics about its monetary unit, now be that Greece having left the euro with the drachma devalued by 50% and prices going nuts, do they then suddenly sort of recognise the issue of unbacked paper money and then we get a hyperinflationary event which would lead to dominoes? Or do we have that same problem with the dollar, which obviously would be, more of an epic one-off event? I don't know. I think it's impossible to say because, in truth, there are such big structural problems in the global financial architecture that, unfortunately, the deflationary scenario is still very much in play, and even in spite of this latest quantitative easing announcement, that is still a possibility. But I think one way or the other, we're ending up with a new currency system and a new monetary system, and leaving aside the clear danger of war, which always comes with these events. If we just leave that aside for a moment, what I would say is that the creditor nations, the major creditor nations of the world, and let's just pick two and say Germany and China, I don't think there's any doubt that they would push for a reformed and more sound monetary system on the back of this one's demise, and I think that's the thing to keep in one's mind.
Okay, a couple of interesting points that you've made, and I'd like to come back to both of them. The first one being that you mentioned gold and silver. Now, as a historian, I know that silver's played a very significant role in the history of money. Is there a libertarian case for silver? I know gold is very much in the forefront of many people's minds in terms of finance, but could there be a role for silver, and could it be beneficial in some way?
Well, just extrapolate the question a little bit. Just give me. I'm not sure I understand exactly what you mean. Go on.
Okay, sure. So, as I understand it, silver has played probably a more significant role in terms of monetary history on a global basis than gold. You know, I live here in Southeast Asia, and for almost all of the languages, the word for money is the word for silver. Same in South America, for example.
Yeah.
And yet, since the 20th century, at least the end of the 19th century, gold has managed to place itself at the centre of world finance, at least in the UK and then Europe and then later the US. And if they did have to go back to a gold standard, central banks would do it kicking and screaming, yet they do still have a great deal of gold. Yeah. Maybe 20%, although it's difficult to know. But they've got a lot of it. But silver they don't have. So is there any case in which, if the free markets did decide, well, actually silver is money too, then we could see some sort of equalising effect away from the central banking grip on finance and into a world where the markets decide what is money in a more fair and just manner?
Well, I think there are sort of two separate points. I mean, I think that the market deciding what is money is absolutely what I want and would support. And I mean, whether this is realistic or not, of course, is a different point. But in terms of what would be most beneficial for human beings, that is to allow the free market to decide what money is. As for whether silver could perform that role, I think it's a complicated question. I think that a lot of this relates to in what form could it perform that role, and I don't think that it will perform a role as an actual physical monetary unit, or if it does, that would be a short-term thing relating to the collapse of the current system. So let's sort of move beyond that and say, well, no, we're back into electronic payment world, but we have an electronic payment world which is restricted in its flexible nature by relating to units of gold and silver underlying. At that point, the relative lack of available silver shouldn't be a massive issue in terms of it backing money. But I mean, there is an underlying point here, which is that silver has been exhausted in terms of the above ground stock. Remorselessly over the last 100 years, and there isn't that much above ground. I mean, there is, I'm sure, a lot more than people realise, and I think that its role historically as money absolutely will allow it to have a role in future. You have a silver debit card which is backed by silver. There's no reason why you can't do that in the future, but obviously, in order for that to happen, silver's got to be, let's say, rather higher than it is today. And I think that could happen. I think that people... But the problem I would say with this is more that I think a free price for silver is so high that it sort of slightly goes against silver's historical nature as money, where it's always been a far lesser monetary value than an ounce of gold, and have also been in abundant availability, which allowed it to pass between people's hands as money. And I'm not sure that sort of traditional role for silver is really realistic. In fact, I would say it's not realistic now. But in terms of whether people would choose it as money, absolutely yes. I think that there's no doubt that the point you make about language and the origin of words, and the fact that silver is also the word for ledger movement in Chinese, in Mandarin. All of these things are absolutely in play. I think they're all relevant, but I think I would sort of say, let's see what the market decides. You know, that's the point we're trying to iterate here, is that it's not for us to decide what the market will choose as money. I think it's highly likely that due to the psychological and historical impact of silver as having been money for so long, is likely to give it a damn good chance in the future. But I would try not to be too dogmatic or opinionated on it and say, look, you know, as far as I'm concerned, you can use bottle tops. If someone wants to accept your bottle tops as money, then let them do it. And at that point, we'll find out, won't we?
Sure. Okay. Well, just a few more questions, ones that are fairly standard to Gold Money Future guests. I think we can safely say your opinion of central banking is probably not a good idea. Is that fair? Just to keep it simple.
Yes.
Okay. And therefore, fiat money, we can tick that off.
Yes, absolutely. You know, anything that is of arbitrary nature and without backing, I can't support that as a viable long-term prospect. No.
Sure. And fractional reserve banking. Any thoughts?
Fractional reserve banking. I think that I'm probably not well informed enough to give you a developed view on this.
Okay.
And I think that it's a little more complicated than it may appear on the surface.
Mm-hmm.
In principle, I don't like it at all. But I have learned friends who have a slightly different view. I personally think that the real bills doctrine is a way of allowing an expansion in money, which can take place outside the fractional reserve system. Again, I would tend to say, you know, there are people who are very, very knowledgeable about this subject, and I would want them to be involved in discussing this going forward if there's going to be some kind of think tank. I wouldn't want to be involved with it myself, because I don't have a depth of knowledge, but yes, in principle, I'm not a fan of fractional reserve banking.
Okay, all right. And will the US dollar, or the Federal Reserve note, whichever you wish to call it, see 2020 still be in use?
Not in its current form.
Wow. Would you dare hazard a guess what sort of year we're talking about?
I think you might well have a dollar. You might, but I will look. I would also, you know, say, well, check out the new bills. There's a whole new series of dollar bills which have been developed and printed in the background. They're not really, you know, some of the 20. I think the $20 notes in fairly broad usage already. But I could see the current dollar system transitioning to a new dollar or an Amero, as people have flagged up, at some point between now and 2020. But as for will the 1.5 cents of current purchasing power versus the original dollar last until 2020 with all the printing that's going on? No, not in my opinion.
Okay.
I don't see how that's feasible on any level. I think something will give between now and then. Whether it's stock split, for want of a better phrase, I don't know. I don't know exactly how it will go, but I can't see it being in its current format in 8 years' time. I think that seems way too long.
Okay. And if you had to put the dominoes in order then of US dollar, the euro, British pound, Japanese yen, could you put them in any sort of order in which they'll go down, or does it not really matter?
A, it doesn't matter. B, I think that's absolute conjecture. And the other way I always describe this, people ask me, you know, what do you think of sterling dollar, as in the cross rate, what do you think of euro, sterling, or etc. And I always laugh, because the answer is they're all just different coloured dog poo on the floor. And you know what? I'm not interested. I know they're all defunct in the long run. So I'm personally, being in the UK, I'm obviously more bearish of sterling. I think everybody who is sort of woken up to what's going on is more bearish of their own currencies. So I'd certainly say that. But as for how they go down, I don't know. But funnily enough, there is the odd paper currency out there which does make sense, and so I'd be more interested in the cross rate between one of those currencies that you've just laid out versus the more fundamentally sound ones for the time being. But as for the exact order in which they go, that they capitulate, I've absolutely no idea.
Very honest. Okay. And in brief, then, the kind of system that you'd like to see instead would just be a free money, free banking system in which I think you use the phrase "let the cream rise to the top."
Yeah, absolutely. I suppose I'm an anarcho-monetarist, if there's such a phrase. I tend to be pretty radical and say that I think that government per se is a problem, not a solution. So I would like to see a more of a localized world. Using technology and restricting government and allowing free markets to run the show. I mean, history suggests that's a big call, and that's difficult to get to that. But I do think that the people are, with the benefit of the internet and the benefit of much broader information distribution, the chance of this happening is greater now than it's ever been before. So one wants to drag that positive possibility towards oneself.
Absolutely. And you've already stated that you believe that if the free markets had the opportunity, they would choose gold and silver. Is there any particular institution that you have got confidence in that you would encourage people to at least consider having a look at in order to buy gold and silver and own it?
No, I think people are well capable of making their own call on that. I would always say that it's about counterparties, and even the very best is still a counterparty. So if you have the ability to own it physically, then I would always suggest doing that first, because ultimately the reason you're doing this is driven by logic, fear, and a rational understanding of the woodworm-ridden global financial architecture. And so no matter how good a counterparty may be, it's still a counterparty. And so I would sort of say, physical delivery and ownership in hand is always the best methodology.
Okay, interesting. Well, Ned, I think that you've impressed all of our listeners with your knowledge on a number of different areas. If they would like to get in contact with you or find out how to do business with you, where do they go?
Well, they can come through our website, which is cheviot.co.uk, which is cheviot.co.uk. We do private client investment management. So if anybody's interested, please come through there. You'll be able to contact me through the website.
Sounds like a great idea. Ned, thank you so much for your time. It's been a pleasure.
Absolutely. Thanks, James. We'll do it again sometime.
Okay. Thank you.